I had a really similar question in my mind where, I know that I think I saw in the news that average debt on a credit card is like over $6,000 per person in the US. And, the mortgage rate's high, the food, energy prices is still high. I'm just wondering how they might be living paycheck to paycheck, but it's even higher than paycheck to paycheck. Like the debt is higher than what they get paid monthly. And I'm wondering how they can maintain that life. How long could that go? And the other thing is, what if we have a major unemployment or a layoff? What will happen to those people that are already in high debt and can't even pay, paycheck to paycheck?
Well, that's a big problem. That's why they're paying the minimum on their credit card, which is means they'll never get out. And of course, because of the lobbyists, credit card debt is not dischargeable by bankruptcy. So they're going to owe that money whether they can't afford to pay it or not. And that debt, that interest is going to keep piling up and piling up, and all they're going to do is owe more money and never be able to get out. And of course, that's another problem that has been created. They make it easy for people to get credit, and of course, they can't pay it back. So they make it easy for you to get that credit card. They make it easier for you to borrow money, and then of course, eventually you're going to have to pay it back because credit card is not dischargeable by bankruptcy.
You say that there's so many warning signs at this point of time in the market, but is there like a specific indicator or a specific event or number that you're keeping an eye on that is a real or really serious red flag to you?
The interest rate market that they're trying to stymie is a warning sign. A lot of things, the way that the markets are being driven only by 6 or 7 stocks is a warning sign. All these little things that everybody just ignores because there's people don't get upset about things until it directly affects them. And when it does, by the time it gets to you and me, it's too late.
In the dot-com bubble, so I think you compared with the dot-com or the great financial crisis, but in the dot-com bubble, based on my research, because I wasn't investing at that time, I was pretty young, any company that even did not have, revenues, incomes, cash flow, just by having the dot-com on their title of the company, you saw the stock price skyrocketing.
Yeah.
And right now, I do see a lot of stocks like NVIDIA, SMCI, or ARM going up. But if you look at the earnings call, they do have the earnings that are backing up their company. Do you think this is a little bit different than the dot-com, or do you
No,
not?
I mean, can it be a little bit different? Sure. Okay. But again, when you look at their actual, their actual PE ratio, I mean, NVIDIA is trading at an 80 to 1 PE ratio. That's a little bit high. I don't care what they do. And again, I'm not saying I'm not a PE guy, right? But just in general, we do have a lot of companies that aren't making money. And again, the bottom line is who's the investor going to be? Where's the money going to come from when we're talking about half of America is broke? Realize that only 10% control 90% of the stock market. So what's going to happen to the little guy, the middle class? They are eliminating and destroying the middle class with their globalism and everything that they're doing from climate change stuff, okay, from the electric vehicles, because they haven't accounted to fix it. All they've done is make us pay for what they say they're going to do, but they don't fix the infrastructure. And you cannot support the quantity of electric vehicles that are out there. So if you're a climate change believer, then you better figure out a way to fix the infrastructure. Me personally, I don't believe in it. But again, I'm not saying that you should or you shouldn't. Okay. At the end of the day, we cannot produce nor have enough cars charged that could actually be running if they actually force everybody to go into electronic vehicles.
Another thing that I was curious to hear from you is you mentioned the small caps. The Russell 2000 is something that I keep an eye on. But if you look at the Russell 2000, it kind of went up, it went down, it's consolidating at this point, but it's not at its previous all-time high.
It's nowhere near its all-time high.
Right. But if I think the small cap actually presents how much risk there is in the market, because if it's a risk on market, I think the small caps would go up. But do you think that the small cap is a very important indicator to tell whether the market is kind of in an uptrend or a downtrend?
No, not really. I just think that the Russell is 20% from its all-time high. And I think that it's showing you that government is destroying the ability for those to get into the small business side of the world. When companies like Google and Meta go to the government and say, please put on regulations on us, what are they really saying? They're saying, we don't want to have any competition. So if you regulate us, there won't be a small cap that will ever have enough money to come and compete with us. Look at the size of Amazon. And I got nothing wrong with Amazon. I buy from them. Look at Walmart. Okay. You can't get a small retailer that can compete with them because they can't get the price on goods. they can't get the same regulations, but yet they have to pay the same employee costs, the same other costs, so they can never make it in the business. And that's why I think the small caps are continuing to go down here. Now, maybe they'll go up again, and I'm not saying they won't, but I'm just saying that the business climate today is not to be favorable to the small cap business or small business or an entrepreneur.
I never thought about that. That's a great thing to think about. Is there a sector that you are keeping an eye on at this point in the market to invest in, or maybe thinking of investing in?
Well, I trade the tech stocks. I mean, I think they're fine. I mean, again, I kind of look at individual. I'm still invested in Apple. I look into some real estate REITs and some, oil. Again, I don't really look at anything specific. I kind of read charts and look for what I want to invest in. And of course, I will trade any market. It doesn't matter to me as long as there's liquidity. I will trade any market that there is from a trading standpoint. But I'll buy things that I believe that are at a value and that I think have appreciation for growth and that are going to be in business for the next 20 years. One of the big things I look for is because, again, if America is going to remain, which is questionable right now, because I think we're on the brink of a revolutionary war or a civil war, but if America is to remain, then I have to go back to the statistics that the markets go up 8.5% year over year. But you got to make sure that you're buying companies that are going to be in business for the next 20 years, right? So again, I'm a big fan of Apple. I don't always agree with everything they do, but I'm a fan of Apple. I own NVIDIA. Okay, I own Google, I own Amazon, but I own a lot of basic stuff as well. And again, I don't look for sectors. I trade whatever I think has value, and I will buy that and I will hedge that, because that's what I do is I hedge all my assets. So I know that my portfolio is always at maximum risk of about 5%. So, and I'm always buying on the way down automatically, because that's what my software does.
So I have my final question. So right now, is a huge portion of your asset in cash waiting for an opportunity, or are you mostly already invested in the market?
I'm always 100% invested in the market, because again, I'm playing the statistics that it's going up 8.5% year over year, but also I'm hedged. So I will be buying on every dip of 3 to 4%. I buy more automatically. My software that I designed buys the stock automatically when it goes down. Like yesterday, I bought 150 shares of coin when it was down at the 200, and now it's back to what, 221. Okay. So again, I will continue to buy into the dips. I'm always going to be hedged. All I'm doing is changing my overall basis. And if it goes up, then I'll roll the hedge up and lock in a higher level. Okay. So I'm always in and I'm always buying.
Well, Todd, I think we went through a lot of topics today, and I think this would have been helpful to a lot of my subscribers. So I want to thank you very much again for your time. And of course, in the later half of 2024, even the early half of 2025, I would love to have you as a guest and, hear about your perspective.
I'm always ready to come back, kid. I'm always here for you.
All right. Thank you very much for your time today.
Thank you.
All right.